Welcome back, everyone, to OIC Conference. I'm very excited to welcome my next guest. Last year, we didn't get a chance to sit down. Our schedules didn't quite align. Luckily, we've had a chance to sit down today. Mr. Joe Mazzola, Head Trading and Derivative Strategist at Schwab. Joe, I know you're a busy man. I know you've had some travel issues, so really appreciate you making the time to sit with us today.
Well, thanks for having me. I appreciate it.
Yeah, thank you. Volatility,
Yeah.
big, it's in the news. It certainly is a topic here at this year's conference.
Sure.
As part of Schwab, obviously you've got an extensive customer base. How do your customers take advantage of or stay away from volatility? Are they opportunities to profit, or do you see it more of a risk event that people might be best to just stay out of?
Sure. Well, we have 37 million accounts, so that gives us a real deep bench to look from, right? And we actually have the ability to kind of see on a daily basis option activity, what they're doing, whether they're buying premium, selling premium. We saw some premium buying kind of heading into the big move down on April 7th.
Yeah.
And then as you saw the reversal on the 9th, we really started to see clients kind of take advantage of those volatility optimization strategies. Saw a lot of selling, whether it was spreads, whether it was puts, ways for them to kind of harness some of that volatility. So, it's on a case-by-case basis, but I would say across the board, educated clients, really took advantage of that move. And that's something that we talk about quite a bit in our education. We have Schwab Coaching, we have the Schwab Network, all these different vehicles for them to kind of access additional options education. And what I think is really critical, and this is one thing that we talk about, is, stocks aren't always mean reverting. They can go parabolic, they can go to zero,
Certainly.
right? Volatility tends to be mean reverting, right? So when they see opportunities like that, a 50, 60 VIX handle, they want to be able to kind of take advantage of those moves and see if that compression occurs, and it did.
So you're seeing from the more educated investor, they're taking advantage of those volatility events.
Yeah, absolutely.
When it comes to education, it's always been my feeling that firms need to take a more active role in making sure their clients know what it is that they're getting themselves into. What's your approach to that? Do you feel the same, that as a brokerage firm, it's your responsibility, your firm's responsibility to make sure people know what it is that they're doing?
So let me start off by saying this. I think it's important that we don't pigeonhole people as investors and traders, right?
Okay.
Investors want to learn how to augment returns, right? And so when we have our live events, we've got one coming to Miami in a couple weeks, we have 600-700 people that attend this, and we don't say this is for you investors here or this is for the traders here. What we do is we say, look, if you're somebody who's not actively trading, listen to some of these strategies, whether they be covered calls, whether they be cash secured puts, some of the beginning level strategies. Learn to use those as a way to either get paid to get into a position, get paid to get out of a position, harness the volatility as we were talking about throughout April.
Right.
But that's a lot of the stuff that we talk about. And for even our dedicated traders, understanding a little bit more about how to manage an IRA or a 401k, or having access to tools for different retirement products, even talking to some of our financial consultants about different ways for them to kind of leverage estate planning and things like that. I don't want to separate the two, because I think that there's a transition between the two, and I think it's very helpful for them to have access to both.
Okay, so you're mentioning investors versus traders. In your opinion, what's the difference?
I would say, that is becoming gray at this point. I don't think it's black and white anymore. I think that, we look at it as maybe a self-directed investor, somebody who wants to do a little bit more in their account to kind of optimize, what's happening in the market, take advantage of dips. We saw some decent dip buying. You can look at equity ETF inflows in the month of April. They were pretty strong that week where we had the big sell-off. They tailed off a little bit towards the end of the month industry-wide, and I think right now you're starting to see investors and traders adopt a little bit more of a wait-and-see approach, just because of the macro environment, right? This is not, we can look at an earnings cycle traditionally, and every quarter we know that we see some volatility around that, but now we have an added layer of complexity in terms of the macro environment and what that can mean any moment of the day.
To put it lightly, certainly, yeah. You were mentioning tools and platforms earlier. Certainly Schwab has, their own suite, very highly regarded. How has those platforms, how has that education evolved over the last several years, and where do you see it going in the next 5, let's say?
Sure. So let me give you an example of one of the groups that I run. It's called Schwab Coaching. We do about 30 hours a week of live on YouTube and on demand. I would say a good amount of the views come from on demand as well. So everything from technical analysis to options education to some basic investing principles. So that's part of it. The other thing is Schwab Network. So that's running daily as well too. If you want to know a little bit more about some market analysis and commentary, that's where you go for that. And then a lot of the tools and instructions that we have on the platform, you can access education from the platform as well, on the platform, as well as some of the things that we're going to be talking about at this conference. Just kind of leveraging different option type of strategies for your accounts. We try to meet clients where they want to be met, whether it's mobile, whether it's platform, whether it's web-based. We have tools and we have the ability to kind of meet them at each of those entry points.
Yeah, I had the good opportunity. JJ Kinahan sat with me the other day to record, and I asked him what his biggest expectation of the future in terms of technology was, and I'll be honest, I thought he was going to say AI. He had said mobile platforms, and that's where he sees the biggest growth. You had mentioned meeting your customer where they are, and in his opinion, and once he raised it, he changed my mind as well, that everybody's got a phone. Everybody's on their phone 24/7. So the future of technology is going to be handheld. You agree with that?
Yeah, I would agree. And number one, Jade is my former boss and a good friend of mine. So you'll see that he and I think alike on many things. But the ability to access the thinkorswim mobile platform and the way that we're continuing to expand the capabilities of that, I think really resonates with clients. And as you mentioned, everybody's on their phone. They're on it all the time. I got 2 teenage children that are on their phones all the time. And a part of it is the accessibility, but part of it is ease of use. I think sometimes you can build out platforms which have a myriad of different cool tools and different risk analysis parameters that clients can use, but sometimes it's just ease of access, right? So what you try to do is you try to work them into both, right? You try to build a mobile platform that has a lot of those risk analyzed capabilities, a lot of those statistical capabilities that are really more advanced option traders want to have access to, but you still want to make it easy so that they can make a trade on the go.
Right. Are you worried about making accessibility too easy? And what I mean by that is, for example, the gamification that people talk about all the time. Is that a concern?
I mean, we've tried to avoid that to a certain extent. And when you're placing an order, we'll have you have the ability to look at a risk analyze tool on the mobile platform and to kind of see where your break evens are, how much you can make, how much you can lose, all of that stuff within a couple clicks of the button. So we want to make that available. We want to make it easy, but at the same time, we also want to protect the client so they understand every single time they press that button what that risk is.
Right, certainly. Because there is a tremendous amount of risk. And to me, that's where the education comes in, making sure people understand. Again, the way I put it is just make sure they understand what it is they're getting themselves into.
Sure.
I know you've got a busy schedule, so I want to wrap this up with the last question, but it's something I'm very interested in knowing. Again, when it comes to social media, I'm sure you're on it and you see all of the talk about how it's the industry, our options industry and the stock market in general, it's a rigged game. Right, it's an unlevel playing field. There's no way the retail investor could win against the professional investor. Personally, I don't agree with that, and I just wanted your thoughts. What do you think? Is it a level playing field? Let's start with that.
Well, let me take you back to my days as a market maker. When I was a market maker, I didn't think it was a level playing field for the market maker.
Right. I mean, there's a reason you're paying a $10,000 monthly seat lease, right?
That's right. And we didn't have access to nearly the same tools or education or the news flow that the current retail client does. And I think having access to those tools really levels that playing field. Now, in terms of execution, we're talking milliseconds. So you're not calling a broker, waiting for them to pick up the phone and execute a trade. You're doing it with the click of the button. And the speed of execution and the ability to get price improvements, and when you're looking at markets that are trading pennies wide, And now you're looking at markets that are trading 24/5. I mean, we've adopted that within the last couple months, where you've got access to S&P 500 stocks, NASDAQ 100 stocks, and a myriad of ETFs that you can literally trade, 24 hours a day, 5 days a week. So I think that's leveled the playing field, especially for not only clients that want to access accounts overnight, but international clients as well too. That's a big part of it.
Yeah, certainly. And again, as JJ had mentioned, in his opinion, it's never been a better time for the retail investor than today. You had mentioned the data that they have access to, the tools that they have access to, the information they have access to that has never occurred before. So it definitely, again, in my opinion, and I concur with yours, that while things may not be perfect, they may not be 50-50 level, but they're closer than they've ever been before.
And I'll say one other thing on that too. Clients adapt strategies, right? If you go back to 21 with the kind of the meme stock craze and the crazy upside call buying and the chasing of these names, what you saw in 22 and 23 was a kind of reconfiguration of, hey, how should I do this?
Yeah.
Let's pause. Let's take a break. Let's get educated on what we're doing. Let's understand fully the risk parameters that are involved in doing what we're doing. And let's look for other access beyond social media, right? For our education, and we're starting to see that now. We're on social media as well too. I'm on X, I'm on LinkedIn, I'm on all of those, and we try to meet clients at those places that we know they're going to meet. I would say the one thing that has been a big change so far in terms of the education on the option side is you've got to take what used to be a 40-minute demonstration and squeeze it down into 5 minutes.
Right.
The attention span has started to dwindle a little bit, so it better be impactful, and you better meet those needs really quickly to make sure that you're keeping them in the fold.
Yeah, and that's the difficulty that I'm having trouble wrapping my head around, is how do you how do you present such a complex topic, such as an option strategy, for example, in a 5-minute, video? It's hard to do. I'm not sure that it's possible to do to its fullest extent, but I agree with you that that's the attention span a lot of people have today. They like everything in digestible chunks. So us as educators, we need to figure out how to give them what they want.
Yeah, I mean, we're doing our best, right? So, like I said, while we have our YouTube offering on Schwab Coaching, we've also taken to making YouTube shorts. So going from the 45-minute long classes down to a 5 or 6 minute long. Here's one slice of education that we really want to talk about.
Like a teaser.
A teaser, right? But there's still education involved in it, and we're doing the same thing on X as well too. We're also adding 2 or 3 minute long videos, one strategy, right? We're not going to try to force feed a bunch of education, but what we're going to do is we want to make sure that if there's one topic that we want to hit, we hit it really well within that time, and also provide access. Hey, you want to learn more? Come here, and we can further educate you on this. And we have courses as well too that supplement that.
Excellent. Yeah, no, I completely agree. It's certainly even more important now to, as you had mentioned, meet the investors where they are. Rather than bring them to us, we need to go to them.
You got it.
Yeah, excellent. Joe, I know you're a busy man today. You've got a panel upcoming pretty soon. Really appreciate you sitting down and taking the time to talk with us. Thanks
so much.
And that's going to do it for today. We'll be talking with you again very soon. Stay tuned for more episodes from OIC Conference. Thanks again.